Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Wednesday and it's the 23rd of August. My name is Russell Shaw. I'm a senior market specialist at FXCM. And I just want to draw your attention to my email address, rshaw@fxcm.com. And I'm just going to go ahead and bring up the disclaimers. We'll start off with the high risk investment warning. I'll keep this on screen for a few moments. Good morning, Kim. Thank you very much for signing in. It's a pleasure as always. Okay, here is the market commentaries disclaimer. And just finally, our references, MarketScope 2.0 and tradingview.com. I want to do top-down analysis this morning, and I'm going to bring up MarketScope to do that. We'll do it using the zones. What I do have here is the NASDAQ with a 5-month and a 10-month. You can see that it's in bullish mode. And the RSI is above 50. Now, before we get into the zones, just want to point out the obvious. August has been a tough month. It's a red candlestick. On a longer term basis, I think that is normal price action. I think the markets, we all know they don't move in a straight line and they tend to zig and zag, and this could be some sort of pullback. There are some factors we have to keep an eye on. Firstly, the fact of the matter is the yields are moving up. I want to see how much higher yields can go. Yields do put a pressure on risk markets. We want to just see if it's got to the point where the bond market is showing enough value to bring the bond bulls back in. And just want to keep an eye on events out of China. China is really showing signs of capitulation. Sounds a bit harsh, but there is worry of contagion in the property sector. The economic data coming out of China is not good. That's weighing on market sentiment. And then we've got Jackson Hole, the symposium coming up. That could be market moving. Look for Chairman Powell's speech on Friday. But by and large, we do have an uptrend in NASDAQ. Let's just go through to the zone analysis here. And instead of looking at it on a daily chart, I'm going to take a look at the zone on a monthly chart. And what you can see here is 3 different zones. Let me just type these in. You've got what we call zone 1. Zone 1 is between the upper blue and the upper red. Okay, that's zone 1. That's our bullish area. You've got zone 2, which is a neutral area between the 2 blue bands. These are Bollinger Bands. I'll go through the settings in a moment. And zone 3 is our bearish area. Okay, and let me just run through the settings. If I double click on the red Bollinger Band, it's just a 20 and a 2 standard deviation. And if I take a look at the blue Bollinger Band, it's a 20 and a 0.75. Now, what I think is very good in terms of the bands is it's almost like a map. If we're in zone 1, well, we're in a bullish area. The longer that we stay in zone 1, the better it is in terms of the probability of higher prices ahead. So we're looking at NASDAQ and we're in zone 1. Last year, we did go into bear market. Okay, there's zone 3. That's telling us that we're in bear market. And then, of course, moving out of zone 3 into zone 1, that's the recovery. Now, we're clearly in zone 1, but let's just do an exercise here. I want to show you the best way to actually do this exercise, go all the way back to the global financial crisis and just run through the steps of a bear market, and then we'll take a look and see if we're getting some sort of reversal here. So if I go all the way back to 2008, okay, that's right over here. Let's just zoom in there. Okay, so we've gone right back to 2008. Here's the global financial crisis, how it unfolds. It unfolds in a number of steps that we can map out using these zones. So the first, I'm going to just use numbers here. The first is a movement from zone 1 into zone 2. Okay, so there's the first hint that something's wrong in the global financial crisis on a technical basis. Then, of course, the second hint that something's wrong, we drop from zone 2 to zone 3. So on a relative basis, moving from the neutral area into the bear area, that's certainly weak, but also moving from zone 1 to zone 2 is also a sign of weakness. By the way, take a look what's happening to the momentum here. Okay, it's dropped below 50. Okay, so below 50 is the bearish side of the indicator, above 50 is the bullish side. Now, the next steps that you've got to look out for is the actual Bollinger Bands. They point in opposite directions. The top Bollinger starts heading upwards, and the lower Bollinger starts pointing downwards. That's an expansion in volatility, and that expansion of volatility is being accompanied by the candles in zone 3. It's a very bearish sign. Now remember, we're talking about the global financial crisis. We're going back roughly 15 years ago, right? But the steps are similar. You'll see then the Bollingers start heading downwards. Okay, the Bollingers start heading downwards. So this would be, let me just do that again. This would be, sorry, there we go. So these would be step 3. The black ellipses would be step 3, and then the catch up in the Bollinger Bands would be step 4. So it's a series of steps that really highlight just how dreadful the bear market was there. And even with the push down in the bear market, there were some months of blue. There were some months of blue. Okay. So given those steps, let's do the reverse with the Nasdaq. Okay. Well, here's step 1, right? We've moved from zone 1 into zone 2. That's a bullish step 1. Okay. Here is the bullish step 2. All right. Now, what I would like to see, I'd like to see the Bollingers starting to pull away from one another. Okay. So we're still lacking in number 3, and then I'd like to see the Bollingers push up. But we've got 2 out of 4 points to the upside, not to the downside. 2 out of 4 points to the upside. So the signals are bullish. They're not bearish. It's just we've had 1 month. We've had 1 month of drawdown. Okay, that's normal. That's normal price action. If the real yield really carries on moving in that northeasterly direction, sure, we'll monitor. And if it drops from zone 1 into zone 2, well, that would be a sign of markets cracking. So, but we don't have that, okay? And the fact that we don't have that, well, I think that we just look at this in terms of normal pullback and just see if we get some sort of trend up here, okay? So, yes, there has been some turmoil in August. I think that's normal. We could do a look at the DAX on a monthly basis. Let's just see how the DAX is looking. Okay. Here's DAX. Which zone are we in? We're in zone 1. Okay. We're in zone 1. Okay. How many points have come past? Well, we've got 0.1 has come to pass. 0.2 has come to pass. And I would even suggest 0.3 has come to pass. Okay. You can see that the Bollinger's have pulled outwards with that expansion in monthly volatility. So we can put in a 3 over there, and we can put in a 3 over there. Okay, so now we're going to see if there's going to be a trend if the Bollingers start pulling in that northeasterly direction. What about the underlying momentum? Underlying momentum is good. Underlying momentum is good. It's above 50. So by and large, the stock indices look, I think, quite healthy. Where it gets interesting is, well, let's take a look at the US dollar now. So now we're taking a look at the US dollar index. Just bear with me as the data gets, as we download the data. There we go. But take a look, where are we? Where are we with, so we've got just step 1. So it does look like the dollar has shown relative weakness by moving from zone 1 to zone 2, but it's actually no man's land now. It is in zone 2. Okay, and that's on the monthly chart. And we've said that's a problem because the dollar's not trending. Okay, so we're in the neutral area on the dollar. So it just shows you what the zones as a map are telling us, using them from a monthly basis. Okay. I'm just cognizant of the fact that there's a second webinar now. It is the Crypto Minute. So we're going to cross over to that. Just before I cross over to the Crypto Minute, are there any questions with regards to the content that we've shown in today's webinar? If there's any questions, just go ahead and type those in. If there's any questions, go ahead and type those in. All right, nothing coming in. So what we'll do is we'll conclude at this point and we'll go through to the Crypto Minute. All right, guys, thank you very much for attending this morning. As always, much appreciated. Have a terrific day ahead.